This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Well, hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today is Tuesday, October the 15th, 2024. Hard to believe we're already halfway through the month of October, and we're so glad you could join us here today. Coming up a little later on in the program, we'll visit with Ross Baldwin of agmarket.net and find out how the markets closed today. We'll also start off, though, with a check of a visit we did with the folks at Earth Optics. Last week, we talked about the merger between Earth Optics and Pattern Ag and heard from the folks at Pattern Ag about their viewpoint of it. And now we're going to have Earth Optics tell us how this is going to benefit things from their side of the equation. Talking with Britt Buchanan of Earth Optics. Thanks so much for taking a few minutes to talk with us.
My pleasure. Thanks for visiting.
All right, so we talked with the Pattern Ag, your partner, and some of the endeavors you're talking about here at Farm Progress. So talk about what Earth Optics and what the messages you're bringing here to the farmers on what they need to know here at the end of the 24 growing season and making plans for 25.
Sure, yeah. I think the exciting part of what we're doing is that we're providing new data insights, and because we're layering them together with one field visit, it's a very economical, not much more expensive than your typical standard sampling that folks are doing today, and you get so much more actionable insight than you've ever had before on the farm.
All right, so tell us how Earth Optics is making that happen and get all those reports and all that data at one shot.
Sure. So industry standard today, it varies by region, but typically folks are doing about a 2.5 acre grid sample every 3 years. This is a approach. It's not a new approach. It's probably over the last 10 to 15 years that's been a gradual adoption on the farm. And it's a step in the right direction. We've been using the word precision, but it's not actually all that precise. For example, on a 100 acre field, we're talking about 40 smaller averages to see variability in the field. Again, more insight, but it's really not that precise, and it involves a big expense at the lab. So our approach is quite different. You could consider it the next generation of soil sampling in that we first scan the field. So we're using multiple sensors. We're using electromagnetic induction, EMI, with multiple frequencies, and we're using GPR, ground penetrating radar. And so those sensors combined are very good at seeing where soil types change. So we get a really good idea up front how heterogeneous or homogeneous is this field, how much variability is there. And then instead of making averages on the field, we only collect point samples and use those as a calibrator to get really granular insight on anything you can measure at the lab. So your macronutrients, your micronutrients, pH, cation exchange capacity. And then we have unique data layers like TillMapper and the biology offerings from Pattern, where since we're already on the field, we can collect and provide all of those data insights from one visit.
And so then all that soil sampling, all that work, obviously then that data gets compiled, obviously using it for what Pattern Ag does, but also you can take that information, work with your agronomists, your crop advisors, all that, and have all that data at your fingertips. But then I guess another one question, and being you're doing the data collection, farmers like to know that their data is safe and know that it's easily accessible. How is that taken care of so they can have peace of mind about what's been taken out of their field?
Yeah, great question. So the farmer owns the data. That's the trusted and true model, and that's our approach. And so we go to market two channels. We do collect data ourselves in a full service, but more readily in the agronomic space, we have a growing network of dealers and partners who collect this data. And so those folks, that's the trusted advisor on the farm. Although they're collecting the data and it runs through our system, it's still the farmer who owns that data and has rights to it. So Earth Optics only uses data to improve our machine learning model in a non-identified way. And at scale in conglomerates in regions. And so it's, again, the farmer maintains the ownership of their data.
And we were talking with the folks at Pattern Ag too, and you talk about how in this climate right now where the markets are down, but crops are looking good and the inputs are a little higher, Obviously, you want to be as efficient as you can with each dime. You don't want to cut corners too far, but you want to be efficient so you know where you can pull back, where you need to maybe put more work in. But having right there off the top of the top of everything, being able to do this with one trip out there to do it, rather than have to have this person come out and then that person come out and run these same drones or equipment around, this is efficiency right there from the get-go with you guys.
Yeah, that's right. It's adding this biology insight and this till mapper compaction, like where do I have compaction and at what depth is an issue. These insights are highly actionable and have a return on investment. And with one trip to the field, we're able to do all three of those data layers for not much more than a typical soil sampling regimen.
So is there anything that we didn't cover that our Iowa viewers, listeners need to know about from the Earth Optics point of view in this partnership and arrangement?
I'll say one of the things I love most about working with farmers, growers, producers, pick your title, is that they know their fields. Often they've walked that field their entire life in some capacity. Even a field that they're just renting for the last few years, they know their fields. And still, it is so fun to get in front of our data with those individuals, because they learn even more, or they're able to reason and understand how certain cultural practices, tillage practices, or even trials they run over the years have led to variability across their field. And so that really granular look at a field is something that growers don't just make better decisions from, but also they enjoy it, and it's really fun to see kind of the story of a field through data.
All right, so where can our farmers learn more about Earth Optics and the work you guys are doing, and how you can help them?
So we're at earthoptics.com, and we are at pattern.ag.
All right, Britt, well, we thank you so much for taking time to visit with us today.
Appreciate it. Thanks for the time.
You can learn more about this merger on the Earth Optics website. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back here on Ag Matters PM, we're going to go through the closing markets.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. We're back on Ag Matters PM on the Iowa Agribusiness Radio Network, being joined right now by Ross Baldwin of agmarket.net. Ross, what did we see come out of those grain markets today?
Hey, Dustin, had a rough day of trade across most all of the commodity space. Corn essentially led the way lower, with December corn trading 6 to 7 cents lower. This was the lowest that D's corn's been at since around September 23rd, I believe it was. Soybeans had an interesting day. They did end the day about 10 cents off of their low that they made early this morning at 981, and November settled the day at 991. So beans were anywhere from 4 to 7 cents lower, you could call it. Saw a lot of interesting bull spreading going on across the soybean space. And over in the wheat market, wheat was 4 to 5 cents lower across Chicago and Kansas City.
Now, obviously, with local harvests going on, local elevators and stuff are not going to be having the highest basis prices as that grain keeps rolling in, but we're seeing some fluctuations, some very low fluctuations, at least in this area, where I just saw my first sub $9 bid for a cash price at an elevator. I mean, is that something that's going to be common, you think, for a little bit?
I think so, especially just across the heart of the Corn Belt. There's areas that you still got just harvest in full swing. Now, soybean harvest is starting to really rapidly progress and start to get wrapped up here. And you're going to see, we've already seen some of the end users on the bean side of things are firming their bids, but as the elevators are just getting so full right now, and a lot of trucks are just unavailable to move the corn and beans, you are seeing basis values stay weaker at the elevators. And I expect to see that here for the next couple of weeks, especially until you see corn harvest get closer to wrapping up and trucks get freed up. But for right now, like you mentioned, I mean, yeah, you were in the gut slot of harvest with corn really starting to ramp up, and you're going to see basis values under pressure here.
Now, obviously, if you can hold off on some of those uncontracted bushels and maybe just hold on to them for a little bit, might be a good idea. But what kinds of things should farmers then be watching for, either to show that this might be wrapping up and they might be inching up, or that maybe they should move before things get worse?
The thing to watch for is, yeah, if you can hold off on selling the grain, or you're going to put it in storage, I would anticipate once harvest wraps up, we're going to see basis values firm up between the elevators and the end users. Especially, I mean, it's very seasonal, November, December timeframe to see corn and bean basis start to firm up here. The risk that you got, though, while you can see basis firm up as harvest wraps up, which I expect to happen, the risk that you got is once the grain starts moving to town, or people start moving more grain, is the pressure that puts on the physical market itself. And we've seen the grain markets had a heck of a rally here recently as the managed money crowd ran for the exit doors on their corn and bean shorts. They last week they only had a short position of 18,000 contracts of beans. At one point, they very well could have been slightly long soybeans. They have accomplished what they set out to do across the corn and bean space when they wanted to exit those massive positions. The problem you have here today is there's not really an incentive for them to flip and go long. South American weather has started to cooperate. You've got the dry season looking to end, so you're going to have pressure on the soybean side of things, and on the corn side right now, we're still staring at a 2 billion bushel corn crop, and there's just zero incentive for them to go long right now, and that likely spills over into the futures market. And so you got to protect against that downside. Now, producers could look at owning some put options to protect against that. If you're going to hold your corn in bins, I would look to just look at getting some puts in place. You could even entertain the idea of selling a call option against it to help cheapen that put up. But there's definitely options to do to protect from the downside if you're going to play for corn basis or bean basis to firm up here.
All right, moving to the livestock side of things. I know cattle was a little lower yesterday. Hogs really took it on the chin. What did we see come out of the livestock today?
Rough day of trade across the cattle markets here. Live cattle, they were called $1.50 lower. Feeder cattle market was anywhere from $2.50 to $3 lower. The cattle market has had such a strong rally here over the last 40 days. I don't think it's a huge shock to see this market finally taking a breather. And you got to keep in mind the cattle market's rallied it's been over a month. It's been almost 40 days that we've been rallying, and it's been a strong rally. I mean, you've had feeder cattle rally almost $25 off of their recent lows that they made. The live cattle market's been a $10 to $15 rally off of the lows. So we're at some high levels here, and producers, especially on the cattle side of things, need to be looking at getting some protection, use this rally. I wouldn't even be scared to get protection under my live cattle or feeder cattle, even with today's sell-off, just because today, just to put it in perspective, today was the first day that live cattle or feeder cattle closed below a previous day's low since September 6th. The other thing to keep in mind is we are seeing the equity markets sell off here a little bit. I mean, they've been cranking out new all-time highs essentially day after day, and the S&P is down about 35 points right now, which that's not a lot. It's kind of like the rally cattle have had $1.40. I hate to say it, but $1.40 move in cattle at these prices is really nothing. And so 35 points sell off in the S&P, it's really nothing. But the S&P is kind of the same thing as cattle. It hasn't closed below a previous day's low since September 6th also. I think you really got a lot to watch for in those markets. If we would see the equity markets really start to pull back, I think that could pressure live cattle futures. And you've had a managed money crowd over the last 30 to 40 days that's really built into a pretty healthy long position across fats and feeders. So I think we're at some good levels to manage some risk and just kind of keep your eyes open of what could be going on, especially not only in the cattle markets, but in the outside markets.
And what about then with the hogs? How did they fare out today?
Hogs, they ended the day 50 cents lower. Not a crazy day across the hog markets. Hogs, similar to cattle, they've been in an uptrend, and I think hogs, they're vulnerable to a setback also, just mainly from the technical side of things. So I think just watch that. I mean, hogs and cattle have both it's been such a good rally for such a long period of time that they're from a technical side, they're due for a pullback. And as we all know, across cattle and hogs, oftentimes the correction or a sell-off is much quicker than what the rally has been.
All right. Well, Ross, if folks want to talk about some marketing strategies and things they want to be thinking about here in these commodities, how do they get in touch with agmarket.net?
You can reach me at our office here in Anthon. Our number is 712-373-3276, or you can visit agmarket.net to find any of the ag market brokers.
All right, Ross. Well, we thank you so much for the insight. We'll talk to you again real soon.
Thanks for having me.
December corn is down 7 cents at the close at $4.01 and a quarter. November beans down a nickel at $9.91 even. Soy meal down $3.50 at $3.11.80. Soy oil up 55 cents at $42.45. Chicago wheat down 5 3/4 at $5.79 and a half. Kansas wheat down 7 cents at $5.83 even. Minneapolis spring wheat down 10 1/4 at $6.16 and a quarter. Oats up 4 1/4 at $3.77 even. Live cattle down $1.52 at $186.72. Feeders down $2.60 at $246.52. Lean hogs down 57 cents at $75.22. Pork cutouts down $1.75 at $89.37. And Class 3 milk a penny higher at $22.54. You can find those market numbers 24 hours a day, 7 days a week at iowaagnet.com. That brings us to the end of the market recap and today's show. Again, you can find all our content online, iowaagnet.com. Follow us on Facebook, X, and LinkedIn. And don't forget to subscribe and hit the bell icon so you're notified each time we put out a new video project. Also, don't forget about the 3 free marketing analysis podcasts, openings and middays and closings every day, where you get your favorite Iowa Agribusiness Radio Network podcasts. Also, don't forget you can find replays of AMPM on the YouTube channel and also replays of Iowa Ag Matters, Weekend Ag Matters, and much more out on our website. From the IARN studios in Des Moines, I'm Dustin Huffman. For Riley Smith, Mark Magnuson, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.